You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, let's hit it. Let's do it. It is time to hit the Option Block. My name is Mark Longo from theoptioninsider.com, as well as, of course, on the network you all know and love. At least I hope so, because you're listening to it right now. And, of course, we welcome you to join us live, indeed, every Monday and Thursday, noon Central, 1 p.m. Eastern. Or, of course, you can get it after the fact. We don't hold it against you on your podcast provider of choice, pretty much on all the major ones. So check it out. If you like what you hear, hey, leave a review. It always helps new people find the stuff. We've been doing this for a while. We always have a good flow to people. But, hey, the more the merrier. So if you like what you hear, head on over there. Kick the tires, light the fires, leave them stars, as the cool kids like to say. And, of course, however you listen live after the fact, send in those questions. We do indeed like to hear them, particularly on Thursdays where we do a lot of your mail. So keep them questions coming. And joining me to help me answer your myriad, your legion of options questions. First, let's go out. Let's see, where should we go? Let's go out first to a sleepy, nay, a quiet hamlet known as St. Charles, Illinois, where we are joined once again by the man, the myth, the legend, the Uncle Mike himself, Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, I always crack myself up during your intro. Welcome back to the program, sir.
Hey, I gotta love my intro. I mean, this is good stuff. I mean, you got a lot of my clients refer to me now as Uncle Mike. I mean, what more could a guy ask for? I mean, I get to come on the show with the rockin' tunes that we have for our intro. I mean, I haven't been this excited to be introduced since my arena football days.
See, you know, the nicknames, the power of the network, they tend to stick. I am the dispenser. I am the arbiter of nicknames, and they tend to stick. So, Trey, you better watch out. Speaking of Trey, a.k.a. the last dad of Krypton, Mr. Trey Jarrell, holding down the Fidelity Active Trader hot seat over here. Mr. Last Dad of Krypton, welcome back to the program to you as well, sir.
Yeah, thanks for having me back. As always, glad to be here. Extra hot and sunny day in Jacksonville, so keeping that seat nice and warm and toasty here today.
There you go. We wouldn't have it any other way, sir. And last but not least, who knows what his seat's like? He could be falling off of it. There could be crickets attacking him as we speak. We are joined once again by the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the show. How goes your plague of crickets, sir?
I have beaten all the crickets back. I want you to know it should be a little quieter, although some of the recordings I've done for OptionPit, I would actually ask the class a question and nobody would answer. And the crickets would chirp in the background.
It was an appropriate sound effect sometimes.
So, which of course I have a tendency to overcomplicate things because I just assume everybody's been trading options their whole life. My whole adult life. That's all I do. It's a full life.
I thought when I first heard it, I thought it was you had added a sound effect to be a little bit rambunctious there and have some fun with it. I thought you were saying your own words were boring. But no, it was nature making that commentary for you, sir. So there you go. Dwell on that as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's do it. Let's get into it. Let's sink our teeth into it. The market's kind of sinking their teeth into it, mostly on the downside on the red today. Seems like we got a little bit of that old, I guess you can call it, that old school impeachment premium. I was pretty new to the options world the last time this stuff was kicking around there. I think I might have been in the S by then. I'm trying to remember exactly when the impeachment proceedings kicked off. But still, it wasn't, it's not a time I remember that fondly or well in terms of how the impeachment played out the last time. Of course, VIX was a different beast back then. It was kind of just an abstract index that was disseminated, and it was on the OEX. So very different world we lived in back then. There were no options. There were no futures. Of course, coming into today, we're still seeing as the tail end of these new impeachment inquiries are spinning up. We have the whistleblower, we have the he said, she said, all that fun stuff. The markets, go figure, they don't really like that stuff, selling off a bit. Not a ton, though. The Dow is the laggard on the day, off about 0.25%. S&P off a little more than 0.33%, and NASDAQ, as it is wont to do, leading the charge to the downside, off nearly 0.75%. Seeing a mixed day out there with energy and gold. Gold obviously getting a little bit of a lift. Not a ton, though. Just about a handle or so. Still north of that 1,500 level. And WTI at north of 56 was selling off again today. Been selling off all week. If you like that kind of stuff, we'll be getting into TWIFO actually a little early today, immediately after the option blocks. If you're listening live, stay tuned for that. It'll be instantaneous, pretty much. I just got to beam in the next crew. And then we're also going to be joined. You guys know I've been chomping at the bit to talk about those new Bitcoin options coming at CME. Why the heck do they launch them now? What are they doing now? Why didn't they launch them on my show last week? All these questions and more I shall put to them in a little bit. So stay tuned for that, listeners. And of course, we're talking about volatility. Our old friend VIX, a wee bit up today. It was up a little more earlier in the session. It was threatening a 17 handle VIX cash earlier, so that would put it up about 1 3/4 handles from where we were last show. Now it's at about a 16.5, so it's up about 1.5 handles from last show. Our old friend VVIX still hovering around that 100 level, about 101.5, puts it up about a handle or so from last show. Still frothy, still elevated. I would expect nothing less given the environment that we're in right now. And our old friend VXX creeping back up the ladder, up to 24, up a point from last show. Remember we talked about all that OI on the options chain that went out last Friday. Some calls, a lot of puts, all of it so close, but not close enough. VXX, that product, it just breaks dreams and breaks hearts on a regular basis, and seems to have done so again with the September expiration. The biggest contract, I believe, was the SEP 50 puts. SEP 20 puts. Those, unfortunately, did not make the cut. Let's see who made the cut this week. Let's go around. Let's go the same way we started. Let's start in Uncle Mike land. Uncle Mike, sir, we got some movement in the metals. We got some downside in the S&P. What's catching your eye out there today, sir?
Well, I'm going to quote the last president that was impeached. It's the economy, stupid. When Clinton went through his thing a few years back, when he was impeached, markets did pretty well in that stage of history. So I really believe that, yes, the impeachment could be something big, it could be something, but I really don't see it as a major market mover until we get some type of action. And what I mean by that is that unless Trump's removed from office, I really don't think anyone's going to care about this. Yes, he could be impeached, but that's going to be really hard to have him removed from office with what's going on with everything. So I don't see that happening. And I'm not trying to take political sides. I'm just trying to look at this as a market participant realist, and that I don't think that's going to happen. So it's with all that in mind that even though we have news that's happening with him and Pelosi having their battles, we have a little bit of a pullback in the marketplace. But keep in mind, we're really not that far off of our all-time highs. So with those things in mind, I think I don't think it's going to be a major issue. The major issue that I think we are having right now, aside from the China deals and all the other major macro events, I think is still the 3,000 mark in the SPX. I mean, I've talked about this a lot on the show, and we've been above it, we've been below it, but we really have not been that far from it. So I do think that until we can really break through it, we're probably going to just sit here for a while. I don't see us going that much below it. I think things are good overall in the U.S. economy, but until we break through it, I think we're going to stay here for a while. So I believe this is a time frame in our history to where, and we've had a lot of others like this, is to where a key number can really dictate the fate of the stock market. Combine that with the fact that it is the third year of a presidential term, and those are typically bullish years. I don't think that Trump's going to allow the market to go that much further, or it's not going to allow the market to have a very big down year, because he's going to want to have good things to say going into his election year. So I think with all those things in mind, the main thing that I'm watching right now is that 3,000 mark.
I just looked it up while you were talking, Uncle Mike, and the impeachment of Mr. Clinton started on October 8th of 1998. So I was not in the S. I wanted to be. So I was just getting on a badge, but I don't know if you recall, Mr. Rock Lobster, but that, of course, that was kind of the heady days of the .com go-go. Everybody and their mother wanted to be on the floor of the SIBO. I had taken my exam, I had passed, and I was waiting to get a seat. And back then, you had to wait about 3 months. There was about a 3-month waiting period for the privilege of paying anywhere between like $15,000 and $18,000 a month just to get down there. Do you remember those go-go days, sir? You had to wait in line for the privilege of paying that much money to get down there. Doesn't that sound crazy now?
I do. I remember those days.
Now you can get all the seats you want for what? For what? The price of a cup of coffee at Starbucks? I mean, how much you want to rent? Sure. Here's 100. Take 1,000. Go ahead.
I remember those days, and I remember them fondly. But I think this will probably end the way the last one did. So, actually, as of right now, according to like his historical procedure, they still haven't. The House has to vote on doing it, and they're just having inquiries to talk about voting on it. So they haven't actually. They actually at some point have to decide to go do it. And they haven't done that yet. So I guess once a vote, when they all have to stand up and be counted, that's one thing. But as of right now, it seems like it seems like quite a media show.
It is funny, I don't want to get political, but just really quickly, I mean, it is funny looking at the dates, how long it took the Clinton thing to fold. Started in early October and it went all the way through to February. So let's say this thing plays out in a similar time frame. It starts fairly soon, and it rolls all the way out to – that's an optimistic time frame, looks like, because they haven't really gotten the thing officially going yet. They just have the inquiry. So we're talking early next year, probably Q1 at the earliest before all this is all done. And then guess what? If you want to get the guy out of office, you got an opportunity a few months later in November, right? So the timing does seem a little bit odd, does it not?
I assume they want to get him out of office so people can't vote for him. That's
I assume, but still, it is a strange MO, strange timing. They waited all this time, right? And then now this is the time. But that's a conversation for another day. Have at it, sir. Yes. I don't want to bring us down the political rabbit hole of madness.
Yeah. It's all I can say is VIX right now is fatigued. You have a 16.5 handle, and the market's not moving. So everybody's sitting here like, we're waiting for something to happen. And that's about it. I don't see a whole lot of, I thought we could have I almost felt yesterday like, okay, there's surprise trade stuff, like we were surprised because this whole impeachment thing's hitting. I just, like timing wise, it would have been the perfect time to say, yeah, we got a deal, and look for a pop. And just hasn't materialized. So I think we're just going to sit around here and do nothing until something comes out, right, one way or the other. So really odd. Let's just put it that way.
It is odd. It is odd. So anything else light up your tape in the land of the pit, sir, or is that it? Just oddness?
Walmart's was making almost, I think, an all-time high this morning, I think. If it wasn't today, it was a day or two ago. So I think that's a theme in our retail seems to be coming back a little bit. And the second part is just how volatile the treasury market is. What the heck's going on? I mean, if you're watching it, it's like every day TLT's moving 1%, which is a lot for bonds. So it's like there's stuff going on, and I don't quite get it. I wrote a blog earlier in the week, just vol pricing is very odd. It feels like the market is trying to price a big move at some point, and it just hasn't materialized yet. And I think part of the reason why you do have some volatility in the treasury market, and we're just we're sitting here waiting for something to happen. So as far as that go, retail is what I would call the equity thing that looks interesting. For me, vol trading, there's not much going on there, and it's just kind of a good time to really not do a whole lot, I guess.
You're not doing stuff. You're telling us you're living the opposite of your mantra. You're not doing stuff. Interesting.
Correct.
Interesting. So Mr. Listeners, take that for what you will. Mr. Rock Lobster, the man who always counsels you to do stuff, not doing stuff right now. Let that be a signal, perhaps in and of itself. What is doing some stuff today, though, in the equity landscape is everyone's favorite, or perhaps least favorite, I don't know, biking name, Peloton. You've waited for it. It's finally here. Ticker symbol PTON. It was going live. It was expected to IPO somewhere between 26 and 29. Went at the high end of that range, surprisingly, up to 29. Seems like that may have been a poor choice because the stock is off now, off about 2.25 handles or so, off nearly 8%, down to about 26.75 or so. So giving up some of that high end of that range, these times, sometimes they get a little optimistic with what they're looking for. There was some talk about it dipping down to 24. Doesn't seem like it has materialized, at least substantially, at that level. Of course, Peloton kind of running into some headwinds at all these other quote-unquote unicorns coming out of these VC-oriented startups that make no money. Public kind of getting a little fed up with those. Of course, we had Uber and Lyft. We have the implosion that is WeWork. It's a rough time. IPOs are like anything else. They're like politics or anything else. It's all about the timing. And if you're coming on the heels of WeWork imploding and everything else, people are going to look askance, maybe take a second look at your numbers. And Peloton, of course, been running at a loss since 2012, posted a net loss of $195.6 million for this year ending in June. That's quadruple what it was the year before. Now, some of that, of course, is marketing expenses leading into an IPO, but still not exactly good. They expect to be profitable by 2023. I love these vague predictions of these companies that are going out there. Also, they're facing a lawsuit from the Music Association for not paying the right rights, $300 million for not paying the right licensing fees to use their music in their classes. So a lot of interesting things going on with Peloton. Mr. Last at Krypton. Are the folks at Fidelity Land, are they diving in? Are they devotees? Are they converts to the Peloton? Are they drinking the Kool-Aid, sir? Or if not, what are they trading over there, sir?
They are, right? So they're always Fidelity customers, always interested in IPOs. So Peloton, right, already popped at number 3 on the list, right? So only been trading now for about an hour and a half or so, right? So coming in at number 3, Fidelity customers pretty heavy on the buy side right now, right? 86% buys to 14% sells. So it makes sense from an IPO, right? They haven't had shares for very long, so you maybe had a couple that abandoned here shortly after. But for the most part, buy side reigning supreme here. Another one that's popped back on the list, kind of speaking of IPOs coming in at number one, and I think one you'll be very excited about, Mark. It was on our list for a while and seems to have faded away. Beyond Meat.
Just going to say, are you going to tease me with Beyond Meat, sir? Are you going to tease me with that? Is that where you're coming with next?
I wouldn't lie about it being up there. Yeah, back in number one. So it's that big jump that it had from the IPO. All the way up to that high of 240 in July throughout that period, right? Certainly a name that was popping up on the list, but since then it's pulled back a little bit. Stock sitting at 153 right now. It's kind of been in this sideways trend really since the beginning of August, right? Had some lows around this 135, 140 range, highs in this 160, 170 range. Big swings, but kind of bouncing back and forth here there. But yesterday, hit that kind of low point for the last few weeks again, right in this 135, 140 range, and a big reversal today at 153.76 that it's sitting right now. Has it up just over 15 points. It was a little higher today, over 160, so it's actually come back a little bit from the highs of today. So not purely from a technical bounce here. There was some news to help out Beyond. McDonald's announced today they were testing the Beyond Burger in Canada, so certainly a positive reaction here in the stock price to that news. Option market on Beyond, interesting here today as well, a little heavier on the call side, so maybe no surprise there with the positive action, about 85,000 calls bought, traded this point to 53,000 puts, with the call buyers kind of leading the way at about 24,000 from the call side on the ask. So 90-day average is about 126,000, so about 140,000 right now. So definitely seeing some activity back in that name today. So very interesting news on that one. Next couple of names, we had quite a few that I know Colin had already talked about last week, so still popular amongst the Fidelity customers. Amazon, Roku, TVIX, rounding out that top five. Below that, did have a couple of names that are in and out of the list here. AMD was one that certainly the options market's been fairly active in there. Since it hit those year highs here, right about 36 at the beginning of August, stock has pulled back, come below its 50 and 20-day moving average, still holding above the 200 from a technical standpoint, but down about 36 cents here today. And Fidelity customers are about 50-50 on AMD, so no big indication from them one way or the other, pushing towards one side. But option market here, very heavy on the call side here, about 115,000, just under 115,000 from the call side to 41,000 on the put side. So about 2.75 to 1 call put. The 90-day average is about 1.8 to 1. So a little heavier on that call action here today, with much of that coming from the buy side, about 51,000 on the ask from the call side versus 33,000 on the sell side of the calls. So some positive outlook or sentiment here from the option market on AMD. Now, another one I wanted to bring up, and this has been an interesting name to follow here with all of the, we've talked about Roku a lot with the streaming services, but Disney popping back on the list here today in our top 10 orders by Fidelity customers, down about 3 today at $130.09 as it stands right now. Fidelity customers using the pullback here maybe as an opportunity to buy. We've got about 78% on the buy side. Stock's been struggling a little bit since its July highs here, right? It was right around this 146, 147 range at the end of July. Pulling back since then, broke below both of its 50 and 20-day moving average. It's got the 200-day moving average, really the next level coming into play of about 126, which 126 is right in this range where it had that big gap up back in April, where stock went from 116 to this 126. Went from 126 to 132 in that single day, but that 116 up to that 126 level had that big gap up and kind of falling right near the bottom of that level right now. So one will be kind of paying attention to see what it does at this price point. Option sentiment here, heavy on the call side as well. Seems to be a theme today. Here on these orders by Fidelity customers, about 98,000 overall calls in the market versus 37,000 puts, which is about 136,000 contracts. 90-day average is only 90,000, so pretty heavy options activity. in here as well. Call sellers actually leading the way slightly, about 25,000 sold on the bid versus 23,000 bought on the ask. So one last name I wanted to bring up, and this is a big company, but one that's not often on the list here. One that's having a little bit of a rough day, which is United Healthcare, UNH, down $5.74 right now at $216.43. So it's just over 2.5% down here. So it's a sector, right? Healthcare that's really been struggling year to date. One of the laggards from a sector standpoint. This stock not an exception here, doing poorly with the rest of the sector. The level that it's at today, right, is very near the year lows, right? It actually hit year lows back in April 16th, had a big downward day then, which dropped down to about 215 or down to about just under 210, on that day. Did close a little bit higher, so the point we're at now is right near that year low closing price. So kind of an interesting level to pay attention to on it here. So certainly a downward trend over the recent few months since July, but overall, right, not a great sign when you're pushing those lows. It'll be an interesting level to see if it could get some traction. Fidelity customers certainly taking an opportunity to take the buy side at this low level. We got 83% on the buy side here on United today. So, option market, right? Not a very heavy option traded security here. 90-day average volume about 23,000 contracts here, but today coming in about 47,000, just over that right now. A little heavier on the call side, right? 26,900 versus 21,000 on the put side. But call sellers kind of leading that charge is about 7,600 calls sold on the bid. So kind of an interesting name here. Big down day here for that one. Kind of nearing those year lows, not quite there, but Fidelity customers were really strong on that one. But that's what I had today. That's what's been lighting up the tape here at Fidelity.
Thank you for that, sir. Let's see what's lighting it up really quickly with the rest of the market coming into showtime here. We saw, even though it was a bit of a sell-off, not at huge numbers, decent, not huge. Looks like SPY kind of leading the charge, at least from a percentage of ADV perspective. VIX not even at 150,000 contracts, so a light day today. The ADV a little bit north of 500,000. SPY, the ADV is about exactly 3 million, coming in about 1.4 million, so closing in on half of their ADV. SPX doing about 500,000, the ADV about 1.3 million, so a little lighter out there in the S. Q's doing about 300K, the ADV 600K, so Q's right up there as well. I guess that's kind of to be expected given the size of the move out there percentage-wise in the NASDAQ. And the Russell kind of bringing up the rear, actually also closing in at about half of its ADV, closing in about 245, and the ADV a little bit shy of 500,000 out there. So a couple of indices out there starting to threaten half of their ADV. Looking at the top 10 out here, looks like some familiar names. A few interesting ones here. Roku, number 10, still lurking in that top 10, 119,000. Number 9, Amazon, $120. Number 8, Netflix, $124. Number 7, Tesla, $129. Number 6, Disney, 136,000. Number 5, good old Beyond Meat. Lighting it up for the rest of you out there, too, beyond the Fidelity platform, 141,000. Number 4, AMD, $156. Number 3, Facebook, 189,000. Hot on heels, of Micron at 190,000 for number 2. And number 1, yet again, dominating the tape, 207,000. Where would the options world be without Apple? Just written contracts day in, day out. I think a few brokers may have gone the way of the dodo if it wasn't for all the Apple love out there in options land. Either way, let's see really quickly where your biases are lurking today. Looks like it's pretty much, is it Facebook, 61%? It's AMD, 73%. It's a tie. AMD and Disney, both 73% biased towards the calls. Yeah, that is kind of interesting. As we keep on rolling, let's see what else is interesting. Let's move right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. And our Eye of Sauron is watching, always watching. But a day like today, it's not really finding a whole heck of a lot. Usually it'll spit out quite a few names, at least a dozen or so trades that we're sinking our teeth into. Today it was one or two so far by Showtime, and most of those pretty small. So there wasn't a lot to really parse. So instead, good timing here to actually check back in on some recent trades that we profiled, see how they're faring. Kicking off with a very recent one, September 16th, so Monday of last week, when we checked in on, looks like a pretty sizable call sweep that went up in Nike. Now, pre-earnings call sweep, you'd think, okay, obviously someone wanted to get some action going out there. I think the earnings were, actually, they were about a week later or so. The earnings on the 24th. This trade went up on the 16th. And yeah, it was, now you think sweep, you think someone's gobbling up. They got to have it. But it turned out, actually, no, let me go back here really quickly to see the day. So actually these went up a little bit closer to, no, it was the 16th. It was the 16th. I take that back. So it was the 16th they profiled this. And it looks like someone was trying to harvest ye old risk premium as opposed to take a swing for the fences during earnings like they normally do. It was the OC 95s that went up in one block of about 8,500 below the bid for 36 cents. As the day went on, quite a few traded that day. And let's see here. A total, actually, of, let's see here. Actually, you know what? No, I'm sorry. These went back. These went up a different day because these went up. I thought these are more recent than that. They're marked as the 16th, but actually this was this week. This was the 23rd, which makes more sense. I knew these were right before the earnings went up. So it was not last Monday of last week, but Monday of this week, the 23rd, which would put them the day before earnings, which makes a lot more sense with this analysis here because they hit the bid and crushed it below the bid, actually, which is not something we usually see, a lot of aggressive near-term premium harvesting around earnings. Usually for the size, it's the other way, that they think they know something. And so a fair amount traded on the 23rd, a total of 12,000 on the day, so another 50% went up after this one block. And the OI had gapped up quite a bit, up to about 15,000. And worth noting, though, and then they kept trading a little bit, a couple thousand here or there the next day on the 24th, actually was when the earnings were, and that was a pretty light day. So the stock closed 87 and a quarter roughly going into the earnings. And we talked about it last time. The earnings, they were pricing in about $0.75. Not a huge move. And even though it was actually dramatically below what they have delivered of late, according to the ORATS numbers here, they delivered almost $4 on average in past earnings moves. So this straddle was priced in pretty light. And even despite that, our friend here crushing the vol out there, he didn't want it. And looks like this one actually didn't work out in his favor because Nike, go figure, delivering closer to what they used to do on their straddles. They opened up the next morning on earnings up $4.50, about 91 3/4 or so. So pretty much in line with their previous past moves and blowing the doors off that straddle. So this guy harvesting the old risk premium looks like it didn't work out in his favor. Go figure, these are still open. Surprise, surprise. And it looks like they are not exactly trading his way right now. Kind of marked in his face a little bit. Looks like they're trading about 75 cents right now. He sold them for 36. So Mr. Rock Lobster, it seems like this could be a bit of an ouchie. What do you think?
I was about to say, because I just saw something about a customer, so I'm in a couple of a Facebook feed for options and volatility, and I can be a little jerky in there sometime for sure.
I don't believe that. I don't believe that at all, sir.
Can you believe that? But anyway, so the guy's the stock's up 10% and I'm down on my calls, right? And I hold my head, guys, it is very hard to buy out of the money calls in an earnings stock unless it does unbelievably great stuff. I actually have a webinar I did on, how to create earnings plays that actually give you a little curvature without costing a lot of money. But I think there's a little bit of an ouchie here, and one of these things is I think you're stuck holding them, right? I mean, what are you going to do?
At this point, yeah,
$92. I don't think you have a choice.
Yeah, at this point, he's got to just grin and bear it. The old fun of the premium seller, right? Pop the Tums, watch the ticker, and hope it doesn't go more against you, and then hope slowly time decay becomes your friend again.
So I think it looks like though it's not so But yeah, you can just hold on to him and see what happens.
So there you go, listeners. You're not the only one who has your trade go against you, and you got to sit there and hope it comes back or try to make some adjustments. This guy is going to be sitting here at least through closer to October expiration until hopefully that decay can come in. Maybe he can close these out at a bit of a scratch, or the stock sells off a little bit. But right now, he's hurting. It's up pretty much doubled in his face against this trade. Now, 9/16, that's what we're looking at next. This is the one we're looking at from September 16th. These are Dish. It's a Dish call Palooza we talked about here on the Monday of last week. And as you recall, listeners, we profiled at the time. They were the September 27th, so going out tomorrow, so coming close to fruition here. 36 calls going up in Dish. 13,746 times was the print that caught our eye and triggered our eye of Sauron out there. Going up near the offer, about a nickel off the offer, nearly 14,000 times. Worth noting, a bunch traded that have traded that day, and there's a bunch open on that strike, a total of, let's see, about 27, almost 28,000 traded on the 16th, gobbling that OI up all the way to 32,000. So just size opening paper on these SEP 36s, SEP 27th 36s, I should say. So somebody had to have it. Somebody had to get their upside love here in Dish. The stock closed at 36.08 on the 16th, so seemed like maybe they were on track. They had a decent amount of time, not a ton, but a decent amount of time to make that, and they were actually in the money at the time, so it seems like maybe all was right with the world. Unfortunately for our friend here, the stock never looked back from that level. The stock is trading right now 34.35, up another, down about another 2%, and it's not looking good. So these calls, after gobbling up all of them, not looking good. Of course, worth noting, looks like they came in right away. Maybe they kind of saw the writing on the wall because they came in right away and took off. Looks like about half of them. So these things traded for around 90-odd cents. They got up to on that day, the 16th, they bid them all the way up to $1.32. So these things got up there pretty high. The next day, 16,000 or so traded. So about half the OI, and half of that OI went away. And they traded for around 60 to 70 cents. So this guy was already maybe starting to realize this trade wasn't working for him and took about half of it off for a bit of a loser. So I guess we can commend him for that, for closing out some of that. Then more traded on the 18th, another 8,000. That seemed like it was more back and forth trading because the OI only decreased by about 2,000. And the rest are pretty much open. Coming into showtime here, we have about 13,000 contracts still open on this strike. So Mr. Rock Lobster, it seems like we're 2 for 2 here in terms of ouchies. We got someone, he had to get it. He had to gobble up all that premium, nearly 30-odd thousand of them. And at least, I guess in his credit, at least he took some of it off. But yeah, not looking good here for this guy either, Mr. Rock Lobster.
I would say, no, there's 12,000 open. You know, I thought a lot of this was around, the Dish spectrum. Like, this really smelled like a takeover play, so I mean, I think they don't run out of time, but it never materialized. If somebody wanted their spectrum and they just don't want it, I guess right now is the answer.
Yeah, if you're going to do a takeover play, give yourself a little bit of room to run, right? This guy gave himself like 2 weeks. And unfortunately, his bet did not come off. There's a couple of small ones we could profile, but instead this Thursday, it's your day. Let's keep on rolling into a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. You guys love it. You hit us up with all sorts of questions and comments and observations and everything about the meaning of life. You guys like your opportunity to share your feedback and ask you questions like VRNQEET. They want to know, but first they say hi. Well, hello, VRNQEET. They want to know, where is the market heading on Monday? No idea. We have no idea. We are not magicians here. We do a crystal ball on Friday, so you got to tune into the Friday show, but that's more for volatility than pure market direction. But you could read into that what you will. So maybe tune into the crystal ball on Friday. That's more of our prognostication segment. Not really this show. Lord Sheepley. I like that handle. Lord Sheepley, he's just a happy guy. He sent us a GIF of Mario with the thumbs up saying, okay. So, yeah, thanks. Okay, I think he must be excited about I'm guessing he's excited about the Mario Kart coming to iOS. I'm going to go out on a limb and say that's what he's excited about. And he apparently wanted to share that with us. So thank you for that, Lord Sheepley. Speaking of sharing, a lot of you shared with us this Kansas Cash comment. He put a nice little meme, GIF, call it what you will, out there of our buddy there, Mr. Sanders. And written on it in that nice white Comic Sans font there, he says, "Spy beers have been victimized." Obviously, this was before today's or last couple of days sell-off. He says, "Today I'm launching a put buyback program. It's only fair." So there you go. What do you think about that, Uncle Mike, Mr. Rock Lobster, and Mr. Last Dad of Krypton? You think we should do that? You think we should have a put buyback program for everyone who's been unfairly victimized by this bull market?
Yeah, I love the idea of the buyback program. I think it's a good thing. It'll help out and for his cause. And that one made me laugh out loud. So I like the idea.
That one brought a smile to my face as well when I saw it. We got some interesting listeners out there. Kevin Duggan wants to know. Here's a real quote-unquote question. And you know, as I've said it before, I don't need to check my calendar. I just check my email, and I know when it's SPY X dividend time because emails like this start coming en masse. Like this one from Kevin Duggan. Kevin says, SPY paid a dividend today and is now trading 67 cents lower this morning. But my SPY calls are actually 6 cents higher. I expected them to fall. Can you please help me understand why the calls are not down? Thanks. I'm going out on a limb, Trey. I'm assuming you guys on the Fidelity hot seat. I got to imagine SPY dividend time is an active time for you guys with a lot of questions like this. Am I correct?
It is. It's gotten a little better. We've added some nice features to give everyone a heads up on the dividends. But, the way I always explain it is, there's no free money in the market. So, in this case, the best thing to consider, right, the dividends are already priced into that option contract. And if you're trading SPY, right, mark that date on the calendar, right? It's they don't announce that dividend until but it falls in this same time period. Here every single quarter, right? It's always going to be on that Friday, so it's a date to mark ahead of time. But one of the things I mentioned we add here too is on the option chain on Fidelity.com. We add a nice little dividend indicator up there when you're picking your expirations, right? You get that ability to see that it's coming up. Here on many of the names that you look at. So we always want to make sure you're aware of that going forward.
Yeah, it seems like, everyone just assumes SPY is just this staid, quiet thing, and you can write covered calls on it forever, and nothing adverse will ever happen to you. Nothing exciting will ever happen. And yet, once a quarter, this pops up. Mike, I'm sure you do a lot of SPY trading. I'm sure you've encountered this. Maybe some of your clients have been befuddled by this. What do you have to say here for Kevin and his SPY call dividend question?
No, this is something that can get everybody. I think you talked about on the show, this one even got me a couple of years ago, just in terms of it was not a huge deal just based on the amount of contracts we had with it. But still, with SPY or anything, you need to be very aware of the dividends when it is. It's kind of like one of those things to where it's like wearing a seatbelt. Most of the time, you're not going to need it, but you need to wear it every time because the one time you do need it and you don't have it, it'll kill you. So I think SPY's dividends, or any dividend for that matter, you need to be very aware of it and be aware of dividends. They save traders' lives.
I'm hard-pressed to think of another regular event in the market that causes as much feedback and questioning from our audience as the SPY dividend. Something as seemingly innocuous and yet causes so much consternation out there. It is fascinating. Glad to hear Trey, brokers like Fidelity are stepping up to help alleviate that, because it clearly is still a pain point for a lot of people. And I think we all collectively, we try on this network. We talk about it all the time. We warn you, SPY dividends coming up. Watch out. Watch your covered calls. And yet, still the questions abound here. Lewis Winthorpe III, who I do believe is Dan Aykroyd's character in Trading Places. I like that handle. He says, I'm in CLDR call options. Let's do a review. Okay. I didn't know we were here just offering reviews to our listeners, but we're nice. Well, we entertain your requests. This is Cloudera. This is a software company, software platform for data engineering and warehousing. And they're trading a little bit shy of $9, $8.96. And this is the name that recently was rallied from $5. It was trading $5 on June 7th. So I'm guessing, A, if you're in those call options, you're probably doing all right. And B, this is one of those names where, it's, as our old friend, the Viceroy would say, it's not exactly a name that maybe screams options. A lot of people would maybe like to go at the stock. Certainly when the stock was trading $5. The stock was an option at that point. I'm looking here really quickly. You want to do a quick review? The biggest contract by an order of magnitude, about 5x number 2 here, open right now in Cloudera, are the June 5 puts for about 250,000 of these bad boys open. So that's some size. Wow. And they're expiring on June 2021. So not even next June. It's June the year after. So obviously size, underlying holder there, probably a corporate officer somewhere along those lines, who's got, so maybe a big fund, who's got interest at that 5 strike. Obviously, it just rallied from there. Doesn't want it to dip below those levels. The number 2 after that, it's all 2021, interesting enough, are the Jan 7.5 puts, which are meaty and still, actually, they're out of the money now. They were in the money a couple of weeks ago. About 50,000 of those. So you're in the calls. You got to go all the way down to number 4 here in the top 10 to find the first call. It's the Jan 2020 10 call with a paltry 12,000 open there. And that's it again for a while on the call front. Not a ton of call interest in this name, probably because it's so cheap. You can go out there and get the options for a song. So I'm guessing, I don't know, Trey, Rock Lobster, Uncle Mike, Cloudera call options, any that float your boat, anybody? Or should we just keep rolling?
I'll bring up just the chart here. So yeah, not a name that comes up or popped up on our orders by Fidelity customers here too often. But if you're watching this name, just kind of looking back last couple of years, a lot of volatility and big gaps and ups and downs on earnings. So did just have an earnings announcement here with a nice pop up in September. So depending on how far you have those out, certainly want to be analyzing here before that next announcement. And from a technical standpoint, right, crossed a couple of interesting levels, our 20 and 50 day here recently, and kind of sitting right below that 200-day right now at 970. The stock the last couple of years is look like it's going to peak over that 200, but every time it's had a pretty strong reversal. So just something from a directional standpoint you'd want to be keeping an eye on here. But it's the only other thing I had on it.
All right, so let's keep the train rolling here. We're hitting the mailbag hard today. I like it. So many people write in. I like to get a bunch of them on here. Dave W. 2323 wants to know, which calls do you like on GoPro? Well, short answer is none. GoPro, another cheap. Everyone's got the cheapy names on the brain this week. I don't get it. GoPro, of course, no secret. They've had some troubles of late, trading shy of the $5 level now, down to about $4.66. They're up slightly, about 1% today. But this is the name that was trading, about nearly $8, about $7.50 back in May. And since then has sold off aggressively, hit a low of about, looks like $3.82 back a couple of weeks ago. Has bounced off that, so it's up about 80-odd cents from there. But still, not exactly a time when I want to be loading up on my GoPro calls. Look in here, quick cursory overview like we did for our friend Lewis Winthorpe III here. The Jan, again, 2021, longer-term contracts dominating these cheapy names, but much smaller size than we saw in Cloudera. These are the Jan 2021 12 calls. That's the biggest position out here, a little bit shy of 16,000. So pretty light for a name that's shy of $5. We see a lot of that action going up in the underlying. So that doesn't really surprise me. Number 2 are the 3 puts. Jan 2021 3 puts, 14,500. It always cracks me up when I see that kind of paper. It's like all the way down to 3, but no farther. We're going to hedge out at 3. Obviously, there's reasons for it. It could be doing CDSs and stuff. But still, it does crack me up when I see that kind of paper out there. So I think short answer to your question, Dave W. 2323, is none. All right, let's see if we got time for... Guy wants our thoughts on PCG. Not really a name. Everyone's got weird tickers today. Let's do this one really quick. Let's go to Nelson. Nelson wants to know, is it realistic to always have a long put against an equity portfolio? Is that just too much drag on returns? I've approached this with a few clients, had some embrace it, and others push back against the cost. Mr. Uncle Mike, sounds like this is the guy who's right up your alley, who's also perhaps maybe got some clients and he's looking to pay for the puts. You got some puts against your long equity. Is it realistic to always have one, or is that optimistic?
I think that you need to, if you can always have it, but I think it needs to be in a portion of your equity exposure. So, for example, I look at it from the standpoint that you have X percent in long equities and you have X percent in hedged equities. So I think it needs to be a percentage. I'm a believer that buy and hold has a very big part, or depending on how big, just depending on the client, but it can have a very big part in your portfolio. But I also believe that hedged equity is also an asset class. Now, if you just have a straight up long put, I'm not a fan of that. Right now in our hedge strategic night, I am just long a long put, but along with the equities. However, with that, we've been getting in and getting out. We've had short puts, we've had short calls. I mean, we've had a lot of stuff going on against it. But just with for reasons just beyond the scope of this question, we're simply long a put right now, but we're in the process of doing stuff, of doing other things. So I do think that it's important, if you are going to have just a long put, to do other things, whether it's sell some call spreads, sell some covered calls, or something like that. But to have just a long put the whole time, to have it drag on your returns, yeah, it will. And I think that the important part of that is to have it in a separate section the non-hedged equities and then section off the hedged equities. But once again, with the hedged equities, I think it's important that you try to finance that in some way, shape, or form. And as my good friend Andrew likes to say, do stuff.
Yeah, definitely. You can't just sit on that put. You got to do stuff. We have a whole show about this too, the advisor's option. Uncle Mike talks about it here week in, week out. You got to pay for that put somehow. And that's where the effort, that's where the savvy comes in. Just buying, 5% out of the money puts in the S&P, that's going to annihilate a lot of your returns if you don't do something to try to pay for that. So, yeah, it depends how you have that put. That's pretty much the long and short of it. As we keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. We've been gobbling and gabbing on about your questions. You had so many of them. So let's keep on rolling around the block. Let's start in the land of the last data, Krypton. Mr. Trey, what is on your radar for the rest of the week?
Yeah, just keeping an eye on the S&P. Right, last couple of days, pretty close to this 50-day moving average here as well. We'll see if it does in fact push to that or hold this level. It's been kind of an interesting level through these last few months. It's come into play a few times. Outside of the S&P, right at earnings front, not really in the heart of earnings season anymore, but we talked about one of the other chip makers earlier on Fidelity's radar with AMD. Micron actually does have earnings after hours today, so at least one name to pay attention to from the earnings front. Expected move was right around $3.40, so be keeping an eye on that here after hours today.
And Mr. Rock Lobster, in addition to your battling with the crickets, your ongoing war with cricketage out there, what is on your radar?
Really, just if the market could break this malaise somehow. I think there's too many things we're waiting for and not enough happening. So, I mean, as far as doing stuff, yeah, I covered a few deltas today, but other than that, I haven't added any new positions. So it's a real wait and see till earnings come out and everything else. It's what it is.
As I said before, the guy who always counsels, if he had a book, it'd be called Get Your Juice for Free or Do Stuff. He's not doing stuff right now, so read into that what you will. Last but not least, Uncle Mike, sir, what is on your radar here for the rest of the week into the weekend?
Still watching the giant magnet with which we call S&P 3000, seeing where we're at with that. Andrew's right. There's really not a lot happening, but a lot of waiting, and nothing's happening yet. So if you are doing stuff, if you're selling premium to wait this out and hopefully take advantage of time decay, make sure that you have your protection in place with your risk management, whatever way, shape it may be. If you're long premium, maybe do some stuff to not get eaten up by the time decay.
Mr. Rock Lobster not doing stuff. Uncle Mike doing stuff. Dogs and cats living together. Mass hysteria. Unfortunately, listeners, that music means We have to leave at least this show there. But if you're listening live, don't worry. You get more right in your ear holes right away. We're going to hop right on after this into some hot and heavy TWIFO action, talking the commodity landscape. Equity volatility going to make it in there as well and skew all that fun stuff. And then exploring the mystery that is what the heck's going on with Bitcoin options. Why did CME announce them now? All that crazy stuff. Going to hold their feet to the fire in a little bit as well. But before we do that, let's go back around the horn. Let's start with Uncle Mike. Mr. Uncle Mike, sir. If I want someone to do stuff for me, I just don't want to do it anymore in my portfolio. Where should I go? What should I do?
You just don't want to do it anymore. Well, even if you do want to do some of it and I do the rest of it, that's great too. We have all sorts of relationships like that. stcharleswealth.com. Be more than happy to help anybody with rolling puts, with creating portfolios that actually believe that volatility and hedged equity is an asset class. There's not many of us out there.
There are not indeed. stcharleswealth.com is the place to go. And Mr. Rock Lobster, if they want to contact you for tips on battling crickets or maybe some of this vol thing, where should they go? What should they do?
Yes. Go to optionbit.com. Look for our website upgrade soon from us. And tonight I'm doing a webinar on flies and learning using volatility. It's 8 o'clock Eastern time. That's Thursday, but of course probably nobody will hear that because the show won't show up until Friday. But anyway, it will be available on the website.
You and Mr. Meatball just chowing down on flies these days, huh? It's the hot thing. All right, check them out, optionpit.com, to learn more. And last but not least, Mr. Last Data Krypton, sir, if I want to kick the tires and light the fires in the options land over there at Fidelity, where should I go? What should I do?
Yeah, so you can always give us a call, 877-907-4429. Feel free to ask for me, ask for the trading strategy desk, or if you'd rather jump online, go to fidelity.com/options. You can learn a little bit more about our options platform and some of the other interesting tools and services that set us apart.
There you go. Fidelity.com/options is the place to go to kick the tires and light the fires. And on behalf of Mr. Trey and Mr. Rock Lobster and Mr. Uncle Mike and indeed myself, I thank all of you for downloading, streaming, subscribing, for listening live, for sending in such interesting questions. Keep them coming. And we'll see you back here for this show on Monday. We'll see you back here live tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern. And we'll see you back here immediately in about a minute once we just flip the script here for some very early, very interesting TWIFO action.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.